Welcome to the Deep Dive. We've got quite the stack of sources you send in: financial transcripts, tech reports, some really interesting executive interviews. And our job, like always, is to sift through it all and pull out the really key insights for you. Today, we're looking at some massive shifts. We're talking factories becoming the product, AI reshaping, everything from movies to manufacturing, and how all this market stuff is playing out, from chips to streaming. It's all connected in surprising ways.
It really is. And what's fascinating is just how connected. This push to reindustrialize, then you've got AI layered on top, impacting everything. And then there are the financial markets, geopolitics. It's all tangled together, shaping tech and global supply chains.
Okay, yeah, let's definitely unpack this. Where should we start? Maybe with Hadrian. They're making some serious waves, kind of redefining manufacturing.
Yeah, Hadrian's interesting. Their whole idea is the product is the factory.
Right, so it's not just what they make, but the whole system. The software opus, they call it.
Right.
Plus this new American workforce they're building up.
Exactly. And if you zoom out, this whole approach, it's really aimed at reindustrializing the U.S., sort of reversing that, 50-year trend of offshoring everything.
And they just got a ton of money, right? Like $260 million.
Yeah, huge round. And fast, too, less than a month. Founders Fund, Andreessen, Lux Capital, the big names are in.
Wow. Okay, so they're serious. What's the plan? Expansion.
Big expansion. They're using that capital for a new factory in Arizona, 4 times bigger than their current one.
Arizona, interesting. Why not stay in California? They've got R&D there, don't they?
They do, yeah. But the sources suggest Arizona's just, easier for the practical stuff. Permitting, finding workers, getting power hooked up. California is tougher for that side of things.
Makes sense. And their goal is what? Factories everywhere.
Pretty much. Thousands, maybe even millions of new manufacturing jobs eventually. Factories in, every state. That's the long-term vision.
Ambitious. And they're focusing on specific things: welding, casting.
Welding, casting, additive manufacturing, critical stuff. Because there's huge demand, especially from the Department of Defense. Think shipbuilding, nuclear forces, munitions.
Areas where we really need onshore capability.
Exactly. And that points to another big issue the sources mention, this huge lack of skills. We apparently need millions of machinists, quality inspectors.
Millions? Wow.
Yeah. So Hadrian's tech, the factories as a service model, it's designed to make people way more efficient, 10 times more. It's not about replacing workers because, frankly, the skilled labor isn't there and the number is needed anymore. It's about enabling the workforce.
Right, augmenting them. And there's a geopolitical angle, too, isn't there, framing it against China?
Oh, definitely. The sources are pretty explicit. The view expressed is that the U.S. basically gave the farm away to the CCP by offshoring for so long. It degraded U.S. skills.
So the mission is to rebuild the U.S. as an industrial powerhouse,
Right.
like post-World War II.
That's the idea. Being able to produce quickly onshore, that's seen as real deterrence. True strength.
And it's not just defense, right? Pharma, other commercial stuff.
Correct. Pharmaceuticals, other commercial manufacturing, too. Their customers range from startups in defense and space all the way up to the mega primes, the really big defense contractors, and the DoD itself.
Okay, so that's the physical manufacturing side. Let's switch gears a bit to AI. How's that changing things? Maybe starting with entertainment. Netflix comes to mind.
Yeah, Netflix is interesting. Investors were apparently a bit underwhelmed by their last earnings call.
Right. I saw that.
But the company itself seems really bullish on AI. Ted Sarandos, one of their execs, basically said AI is a tool to make films and shows better, not just cheaper.
So it's not just about cutting costs.
Doesn't seem like it, no. They're already using it in production. Things like pre-visualization, planning shots, visual effects, making the process smoother, more creative.
That is significant because most Hollywood studios have been kind of quiet about how they're using AI, haven't they?
Very quiet, yeah. So Netflix and Amazon's House of David project, too, they're pretty high-profile examples of AI being embraced more openly.
Beyond movies, AI is just driving insane demand for chips, right? TSMC.
Oh, absolutely massive demand. TSMC reported super robust AI demand. Customers like NVIDIA, Apple, it's fueling huge capital spending for them.
And this whole AI boom is influencing policy, too.
It is. Looks like the Trump administration is prepping some new AI guidelines. The focus seems to be on maybe easing up on regulation, finding more energy sources for all the data centers AI needs.
Right, power is a huge constraint.
Exactly. The goal seems to be speed and adoption for the tech while still setting some basic rules.
Okay, but here's where it gets a bit tense, maybe. The U.S. House Select Committee on China isn't happy.
Right. They're criticizing the administration for letting NVIDIA sell some AI chips back into China, specifically the H20 chip, after there was a ban.
Hmm. So what's the worry there?
The concern, basically, is that even limited sales could help Beijing get more AI capability, which could potentially boost their military or intelligence operations. It's that classic tech security tension.
Yeah, a really tricky balance.
Yeah.
Okay, let's circle back to Netflix for a second, because their stock situation was weird, wasn't it?
Yeah, it was.
They beat all the financial numbers, revenue, margins were up. Their ad tier is killing it, apparently, like half of new signups.
Yeah.
Set to double revenue next year.
All true. Strong numbers across the board.
But the stock dropped. What's up with that?
Well, it really shows the high bar Wall Street sets. The stock had already doubled in the past year. It was up 40 or 50% just this year.
So it was already priced for perfection, basically.
Exactly. By conventional metrics, you could argue it was already overvalued. So just beating estimates wasn't enough to get investors excited again. Plus, engagement only grew 1%, which maybe spooked them a bit.
Right. Expectations are everything in the market.
Totally.
And thinking about the broader market, Fed policy, interest rates, that has a huge ripple effect, especially on private companies' valuations.
Oh, a massive impact, especially for companies thinking about going public. As interest rates potentially come down, well, that risk-free option of sticking money in, say, a money market fund earning 2, 3, maybe 5%.
Becomes less attractive.
Right. It pushes investors to look for higher returns, to put more money into risk assets, things like venture capital, tech stocks.
Yeah.
Stuff where you're aiming for, 20% returns or more.
And even the big banks are shifting focus. JP Morgan is covering private companies now, like OpenAI.
Yeah, that's a pretty big signal, isn't it? It shows how much the market landscape is changing. The thinking for private companies is just different. They're expected to be burning cash, focusing purely on growth.
Like students, as one source put it.
Sort of, yeah. Prioritizing growth over profit now. So if OpenAI isn't projected to be profitable until, say, 2029, that's seen as less critical than it would be for a public company already expected to make money.
Interesting. So investors need to understand both public and private markets now.
Increasingly, yes. So much of the U.S. market value is actually tied up in private companies now. You can't really analyze the public market in isolation anymore. They're intertwined.
And speaking of valuations, those magnificent 7 tech stocks, they actually got a bit cheaper recently.
Relatively speaking, yeah. There are these deep-seek questions popping up, basically concerns about how much it actually costs to run these super advanced AI models at scale.
So maybe the AI profit assumptions were a bit too optimistic.
Possibly. That plus the impact of tariffs. It maybe created a bit more of a margin of safety for those big names compared to the rest of the tech sector, which some see as being in extreme valuation territory right now.
Okay, one more thing on the supply chain front, graphite. The U.S. is putting duties on Chinese graphite.
That's right. Preliminary anti-dumping duties, pretty high ones like 93.5%.
And graphite is key for batteries, right? EVs, energy storage.
Crucial component. And the U.S. gets about 3/4 of its synthetic graphite for batteries from China currently.
So this is going to make batteries more expensive to make here.
Almost certainly, yeah. It'll increase the cost of making battery cells in the U.S. That impacts the EV sector, energy storage. The goal is obviously to encourage domestic production, build up a U.S. supply chain.
But in the meantime, costs go up for consumers.
That's the trade-off, yeah. Short-term pain for potential long-term gain, I suppose.
And even companies like TSMC building plants here are facing hurdles, aren't they?
They are. The sources mentioned culture differences, operations being more expensive than in Asia. They're actually asking the U.S. government for help for their suppliers to navigate things like permits and finding enough workers. It's complex.
It really is. Okay, so if we pull all this together, this renewed focus on U.S. manufacturing, supercharged by AI, shifting investor views, global supply chain pressures, it really makes you wonder, how do all these forces combine to define what's next? What does innovation even look like in this new era for you, the listener?
Yeah, it's a landscape that's constantly being redrawn. Economic strength tied to industrial resilience, AI as this massive accelerant.
What new kinds of power or maybe vulnerabilities are we building? Where does that leave different economies or even individuals in this race? Lots to think about. And that's our deep dive for today, hopefully digging into Hadrian's manufacturing revolution, the twists and turns with Netflix and AI, the market dynamics. Hopefully it's giving you some really valuable nuggets.
Yeah, our goal is always to give you those aha moments, cut through the complexity, and just help you connect the dots, see the bigger picture a bit more clearly.
Give you that shortcut to being well-informed.
Yeah.
So if you enjoyed this deep dive, learned something surprising, definitely share it with other folks who love to learn. We'll be back soon with another stack of sources to unpack for you. Thanks for tuning in.